Hi, I'm Darcel Lobo, and I own Dow Law Firm in Normandy Park, and here to talk to you today about how to avoid foreclosure. If you're past due on your mortgage and you're facing foreclosure, whether or not you actually have a foreclosure date, let's go over some of the options, and I can explain some of the ways which our office may be able to assist you. Now, there's two different tracks that we can look at in regards to avoiding foreclosure. One would be if you want to save your home, and the other one would be if you don't want to save your home. So we'll start with saving your home. The first option would be to just work out some kind of repayment plan to get caught up on the past due amount. However, that would require they are able to make the ongoing mortgage payment in addition to another amount to be able to get caught up on the past due. Many times we can see maybe 12 months, maybe 24 months lenders will give for you to get caught back up. So this would be good if you had a temporary hardship that has resolved itself. Maybe you were temporarily out of work. Maybe there was some kind of short-term medical concerns as to why you had reduced income and could not afford to make those mortgage payments. So if your hardship was short-term and you have resolved from it, and depending on how much the past due arrears are, you may be able to look at a repayment option just to get caught back up and to give yourself a little bit more time to do so. If that's not a viable option, if you need more time, or if your hardship is more long-term, you may want to look at a loan modification. A loan modification is a renegotiation of the contract terms for your repayment on your mortgage loan. So it could be reducing your interest rate. It could be extending the term of your mortgage loan. In some cases, there may be some forgiveness of the amount due. Or in some cases, there may be where the lender will take whatever you are past due and put it on the back end of the loan. We've seen a lot of that with COVID forbearances for clients who had financial hardships due to a COVID-related reason. And a lot of times in those instances, the lenders would take whatever was past due, they call it a forbearance that was in place, and then put that at the back end of the loan. So it's not reducing how much you owe. It's not changing the terms of your repayment. It's just getting you back to being on time with your payments and whatever that past due amount was, putting that on the back end of your loan. Another option that we spend quite a bit of time helping clients with is Chapter 13 bankruptcy. Bankruptcy can be an option to stop a foreclosure, at least temporarily, and give you the opportunity to work with the lender to keep your home. Now, there's two types of bankruptcies for individuals, Chapter 7 and Chapter 13. A Chapter 7 is not going to save your home. If you're past due on your mortgage and you want to keep your home, Chapter 7 is not the correct option for you. You do not want to file Chapter 7 if you're past due on your mortgage and you want to save your home. If you go with that option, you're probably going to end up losing your home. So if you're looking to file a bankruptcy to save your home, then you're looking at a Chapter 13 bankruptcy, which is a 3 to 5 year payment plan to get caught back up. So there's a few things you can do with a Chapter 13 bankruptcy. You can use that 3 to 5 years to get caught back up on the past due. You can use that time to work on a loan modification with your lender. Or if you are gainfully employed, after you make 12 months of on-time payments, there are some mortgage lenders who'd be willing to work with you to refinance your home to get caught back up on your mortgage. Besides just dealing with the mortgage and a Chapter 13 bankruptcy, we're usually dealing with other debts as well. If you have car loans, if you have taxes, if you have credit card debts, medical debts. In a bankruptcy, we can't pick and choose what debts we deal with. We deal with all the debts. But sometimes a Chapter 13 bankruptcy is really the best option for my clients to be able to save their home, especially if the foreclosure date is coming up very soon. You could file a bankruptcy the day before, even the day of your foreclosure auction, and stop the sale. I would not advise waiting until that late amount of time before filing the bankruptcy, but it has been done. We've done it for many clients, but generally we like to have a little bit more time between the bankruptcy filing and your foreclosure date. So those are a few options if you are looking to save your home, you're facing foreclosure, and you want to get out of foreclosure. But then there's also some options for clients who are not saving the home. There are some situations where keeping the home is just not a viable option for the client. Maybe there's been a change of income, maybe they have an adjustable mortgage, and there just may not be a way to save the home. So in those instances, we're always looking to just a traditional sale of the home. In the current real estate market, generally speaking, most clients have equity in the home to be able to sell the home and actually receive sale proceeds from selling the home to assist them with moving forward after they've sold their home. But let's say you're upside down on your home. Maybe you do not have any equity in your home. There are some options for you to avoid foreclosure. One of them could be a short sale where you sell the home for less than what you owe on it. So for instance, let's say you owe $400,000 on your home, but the home is only worth $350,000. That's called a short sale. There's nothing short about the process. It's a longer process than a traditional sale, but it's called a short sale because the lender is getting shorted. They're not being paid in full on that contract, on that mortgage that's owed to them. So in a short sale, you are selling the home for less than what's owed on the mortgage, but your mortgage company has a say in that process and whether or not they will accept the offer from the buyer on the short sale. Another option is a deed in lieu. That's essentially a voluntary repossession of the home. We are giving the keys of the home back to the bank and walking away from the house and from the mortgage. That can be an option as well. Again, that would only be an option if you're upside down on your home. And by that, I mean that you don't have any equity in the home and there's no proceeds to be had from just selling the home. So those are a few options if you're not saving the home, but you don't want to face a foreclosure. Now, most clients that come to us, they want to save their home. And we help them, again, with repayments, with loan modifications, with Chapter 13 bankruptcy. There's a few different options that are available to homeowners who are facing foreclosure and want to save their home. If you would like assistance and you're in Washington State, give us a call or a text. Our number is 206-408-8158. Thank you.